as oil prices have been going down, the government has cut the windfall tax and the export duty on fuel. Now, the government has cut the windfall tax on domestic crude production, and the tax on domestically produced crude has been cut by 27% from 23,250 rupees to 17,000 rupees per ton starting 20th July. Now, what are windfall gains really, and why were they being taxed? Unexpectedly large profits made by companies are called windfall gains. Now, these taxes, the windfall taxes, were imposed by the government earlier this month. The government had said that crude prices have risen sharply in recent months, and the domestic crude producers are selling crude to domestic refineries at the international prices. So, as a result, the domestic crude producers are making unrealistically and extremely high gains, which we call the windfall gains or the windfall profits. To control these, the taxes were imposed, but now that oil prices are down, the global prices in the international market, the Brent crude prices have gone down. These taxes on unreasonably high profits made by oil producers and refiners have been cut. Now, in addition, the government had earlier said that because of high crude prices globally, domestic fuel producers and refiners are exporting their produce to make those high profits, and for that, they're drying out the domestic supply. So that is putting the domestic fuel supply at risk. But now the government has cut that duty as well. 6 rupees per litre excise duty that was announced on July 1st has now been completely scrapped. The export duty on diesel has been cut from 13 rupees per litre to 11 rupees per litre, and that on jet fuel has also been cut from 6 per litre to 4 per litre. So all of these measures announced after crude oil prices have been going down. When crude oil prices were going up, the government was concerned about higher prices, about companies making a lot of profits, and about the domestic supply being in risk. But now the prices have gone down, so that is why the government is easing these taxes. Now, they have been cut 20 days after they were initially announced, after the first release on July 1st announced all of these taxes. But why have they been scrapped? As crude oil prices, of course, have come down in the international market following growing fears of a recession in the global economy that could impact the demand. Now, crude oil prices are down by 7% in just a month, as you can see in this graph, and the taxes were announced because of the rise in prices, and now that prices are down, the taxes have been cut. Now, what will be the impact? It will be a relief for oil giants such as India's #1 fuel exporter, Reliance Industries Limited, and the top crude explorer, Oil and Natural Gas Corp, as they now have to pay less export duty and tax. But what will be the impact on you and me? Well, not so much. The government says that such taxes don't impact domestic fuel prices. They only impact the profits and the taxes that the big oil giants have to pay.